Welcome back to another midweek episode of the Andrew Hines Real Estate Investing Podcast. I'm your host, Andrew Hines, as per usual. And today I'm going to go over a couple of different things. Number one, I wanted to talk a little bit about the spring, what's happening in the real estate market, specifically with listings, some of the chatter about the interest rates and what's going on there. I also wanted to touch on the process of U.S. investing and U.S. immigration for those who are thinking about doing the E2 and just what I've come to know about that process. I know I've touched on this before, just kind of give a little bit of updated thoughts on that if I have time. I don't want to stretch this out too long. And I also wanted to touch on what Canada's doing and, from an economic policy, from a bank policy, and how that compares to the U.S. and what we're likely to see. So, I guess I'll just start with the listings, and this is going to kind of tie into bank policy anyway, but just the fact that we are seeing significantly more listings this spring and what that might mean. I mean, one of the obvious answers is a lot of people are starting to renew into their new mortgage rates and are thinking about downsizing. They're thinking about maybe this house is too much. And that's like, if you think about sort of macroeconomic, just common sense thinking, how does behavior shift at a macro level in an economy? Well, if people realize things are getting too expensive, they'll look to cut expenses. So selling houses makes a ton of sense. You'll recall from past episodes, we've talked about the fact that only about a quarter of people were feeling the new mortgage rates. Most had not yet renewed. But as every year passes, we're going to have, say, about 25% of people renew into this new interest rate climate. So think about all the people on fixed rates that they've just not felt the burn yet. Well, that's going to change. And what that's going to obviously do is cause more listings to hit the market. That's the one effect. Now, of course, we've talked about this over and over and over again, and no one knows exactly where we land. But the other effect is the immigration part, right? So the immigration is kind of coming in. They're throwing money in. We have international money coming into the country and buying up that real estate and forcing it in the other direction. The obvious effect with all these listings hitting the market would be downward pressure on prices. But will it land there? That's obviously the question. We don't know. Just a bit of a basic explanation, but I mean, I'm looking at a chart here and we're seeing like 60% new listings in one market, Vancouver, compared to like 3.2% sales. I've got another one for Edmonton. It's like 44% versus 13. So there's many markets that are seeing this. Toronto, on the other hand, is even lower, so they're certainly seeing a lot of listings, somewhere around 47% new listings, and somehow negative sales. I don't even know how that's possible, but I'm just reading this off of a chart that was shared on social. So again, it adds up. And one of the things I loved back in school when I was taking economics is if I didn't know the answer as published in a theory, I could actually sit there and think through it and come up with the answer, because it's all just psychology. It's all, if then human behavior kind of scenarios. So definitely something that I could say I would have expected, and I expect to see more of this, more people starting to list, and in a vacuum, if that was the only thing that was happening, of course, we would see prices continue to come down. The other side of that is there's been massive cuts to new construction. I just saw something shared. A crazy amount of jobs have been cut. New developments, again, you going back to the logic behind it. If I'm a developer and I see all this uncertainty about prices and what I can sell units for, and I'm not getting the pre-construction sales, am I going to start new developments? And the answer is obviously no. So as far as housing problem comes, immigration might be slightly controlled, but we're still going to have a supply shortage. So how much can pricing really fall? I'm sure there's some complex equations that could maybe venture a guess and maybe approximate, but we could be completely wrong because of the political levers, because of policy changes. I mean, you never know. And this whole discussion is why I never really get too into the weeds with economics, because there's idiots at the helm, like, quite frankly, and I just don't care to dig into their nonsense that much. I mean, it's important to be aware, don't get me wrong, but take it as information, and for sure make decisions that head you in the either or. So if prices are going to go up or if prices are going to go down, make sure your plan makes sense. So I know people who are still looking in Western Canada, they're still looking in Ontario even, finding deals, making them work, creating the deal, and nothing's ever really changed on that front. If you want to get fantastic deals, you sort of have to create it. You either make insane money on the buy because of your systems for acquisition, or you have really exceptional renovating and development team that can add value to you at a cost that's an unfair advantage to you compared to others. Or you have a disposition strategy that's very niche and allows you to, make money on your sale of your properties. There's a number of ways to create a profitable business in Ontario and throughout Canada. And there's still much business to be done here. I guess the question is, where do you see your long-term outlook? Is that in Canada? I just had a coaching call with some students who booked a call with me, and for them it was 100% Canada, not even a thought about the US. So there's still many of that type. I'm in a little bit of a bubble with a lot of people who are also investing internationally, whether it be the US or Costa Rica or Mexico. A lot of people who want to get that diversified hedge, which is why I figured, I would dig into a little bit about what that process looks like at a very high level. I have absolutely no certifications of any kind, so anything I say is just my take, just so you know. But before we get to that, so the news is no cuts. Whether that were to happen or not happen, I don't really think it would be that big of a factor on housing prices in the direction, but of course it would have some impact. But I've been saying this from the beginning. Everybody was pricing in these cuts. I'm like, slow down there. I really don't think so. I think that's a lot of hopium. Not to say that it won't happen, because historically there's no precedent for rates to stay this high for this long after a major spike percentage-wise. So they went from 2% to 5% or 6%. That's like hundreds of percentage points of increase, which is unprecedented, but we don't really have that much of a history in the fiat system here in North America. So, there also is no precedent for a number of things that have happened recently. So grain of salt with all that. But no cuts really being predicted right now. There may be another. Bank of Canada sentiment is people can afford the higher mortgage rates. Well, psychologically, what's that going to do? That's probably going to make more people start planning to list their house, because they're not, before they were thinking, oh, we'll just let rates come down. We're going to only renew for a 2-year, and then we'll renew into a lower rate in 2 years' time. I'm even one of the people who did that, where for our camp, we only picked a 2-year rate. Granted, we were at like 7.6%. So, I figured it was worth taking a look in a couple of years. But who knows? Again, could be wrong in that decision. That's the risk we take. Okay, so say you're considering all this and you're thinking, gee, sure would be nice to not be here to watch the fallout in Canada from a political and Bank of Canada standpoint. They've got this inflation problem. They've got the population problem with the aging population, that they have to immigrate younger people to replace the workforce of Canada. Seeing all that, there's obviously a lot of people who are starting to leave. And one of the things that I thought was absolutely hilarious was that Trudeau proposed a $25,000 exit fee for those who wanted to leave Canada. And I was just speaking with a friend of mine, and they're making it harder and harder for Canadians to give up their tax residency. So if you could still hold a passport to Canada, but not be a resident of Canada and pay zero Canadian income tax. And that's becoming more and more of a popular thing. And there also will be people like, say, Thomas Larini, who's been on the podcast before, who's an American now, not a Canadian resident, but has investments in Canada. So he'll pay taxes on his investments in Canada, and then, get the more favorable rates in the US. Of course, he's in California, so it's probably, fairly similar. So there's a number of different strategies that people might take, but one that's obviously becoming a thing is the quote-unquote immigration crisis in Canada. So the multi-generational Canadians who have been here for decades, and their families were here, and they, the 5 generations lived here, and they see what's happening, and they're like, you know what? We had a great run. I don't want to be here for this. So they have money, they're intelligent, they're well educated, and they think, okay, we're going to talk with our accountants and our lawyers, and we're going to exit so that we're not left cleaning up the mess of all this. And that mess is, well, how is Canada going to service the higher debt eventually? They're going to collect it through taxes. They're going to desperately try to collect it through taxes. Number of different things that they're going to do, but I would assume that's part of the plan. Evidently part of the plan. The insane guy that runs the country called Canada, and some of the crazy stuff he's been saying lately, which I don't pay a ton of attention to, but I do catch the snippets. There's obviously going to be more and more attempts to kind of take what they deem as their share. So knowing that, really, really smart people, a lot of them, not all of them, of course, many are going to just really smart people stay here and crush, and hats off to them. I think it's awesome. A lot of many really, really smart people are going to leave, and they're going to take their money to tax havens. They're going to go to the US, to tax-free states, and they'll do what's called, I believe, I'm not an accountant, don't take advice on this. This is just my estimation. This is just my observance of what happens. They'll basically do a deemed disposition. And I've talked to my accountant about this. So anything you own in Canada, you'll now pay tax on it. On your gain or your loss, you would potentially get a credit, I guess. I'm not 100% sure. CAs in the audience can correct me on that. But basically, you would pay tax on any unrealized gains you had. So if you had a rental property that's worth $500 now and you paid $200 for it, well, you're going to pay tax on the $300 gain as part of the leaving process. So not a small thing to begin with. Trudeau's proposing to add $25,000 to that. I look at that and I think that's hilarious, because if you think $25,000 is going to stop somebody who's made that decision, obviously it's not. But it could sway some people who are on the fence. So fair enough. I get it. But it's not like you can just leave at the drop of a hat without going through that process, unless you want to do, and I have met somebody who did this, and it's not advice whatsoever, but they didn't even square up with, I'm not even going to say it. They just went and moved to Costa Rica, and eventually they did get it sorted years and years later. But that relationship between Canada and Costa Rica, I guess, allowed for them to do that. To my knowledge, that's not even possible with US. So if anybody's thinking that, I don't actually think that's a possibility. So you say you did all that, well, you would still need the U.S. to want to take you. And there's a number of different ways you could do that. If you had a company that would sponsor you, if you're specialized, if you're like a nurse or an engineer, or you have, you're a high talent individual, there's a number of different visas you can go for. The number one I see, there's one that's like an L1 or an L2, which is related to a company and a workforce. So if you're starting a company that's related to a company that you had in Canada or expanding to the U.S., and don't quote me on that, obviously double check everything I'm saying here. And then you have the E2, there's probably an E1, and I don't know the difference of what that one does, but the E2 is for investors. Typically, the guideline is $100,000 investment in a business, an active business that would realistically require you to be there. Real estate does not work for that. Property management does, Airbnb management does, and this is just from what I hear, and I've had many conversations with an immigration lawyer. I paid the retainer, I started the process, and then I put a pin in it when I found out we were having our first son, which he was born in 2021. So I had already started this in 2021. There was a time where I actually thought there was a chance I might not come back to Canada at all. During the lockdowns and what was going on, we were like, yeah, we're just going to sell everything in Canada and just leave. My son changed that big time because we wanted to be around family. So, we put a pin in that. But I am going to be continuing on that process in the E2 to have it ready just in case we decide that that's what we want to do. So the E2, that's typically an active business. I've heard of somebody doing it with just 4 Airbnbs. I've heard that same story a couple of times from different people, different sources have said that'll do it. And I know somebody else that did just a management company that they basically just do like landscaping and various different activities needed by real estate investors in their properties. So they're not officially a manager, because in Florida you need to be a licensed realtor to be a property manager. However, an angle in on that, like same thing with a realtor. So I know there are people who are realtors in Canada, like say you want to go down, you have to invest in your own brokerage. So it's not like you can just join somebody else's. So there's a lot of hoops to jump through. Now, as far as the E2 process goes, there's a huge variance on that. I've talked to somebody who the total cost to do everything was going to be something absolutely obscene, like 30 or 40,000 US. And then if you wanted their business solution, it was even more. I've also talked to people who, like for instance, the one I paid the retainer on won't help at all with the business plan. Like I have to create the business plan myself, but we'll consult on everything for 6,600 US. That was a few years ago now. I paid the retainer and haven't followed up since. So it could be more now. And I've heard, it's in between, 15,000 to get it done, different stuff like that. So it just depends on what you want included in what you're doing. And I've had people who listen to my podcast, they heard me talk about this, they like hit me up in a DM, they're like, hey Andrew, I live in Florida now, we got our E2, we did this, like it's crazy. Like sometimes I have to poke myself to, it's actually real. Like it's funny the impact that this podcast has on people. So they'll hear an idea and they'll go out and do it. I'm happy to hear that because I think a lot of people are really making things work for them by relocating. So there are other people who will go to a place like Costa Rica or they'll go to, I don't know anybody personally. I know one guy who did it on a work visa to go to the Cayman Islands. So, and that's a tax haven or tax sheltered haven. So, there's a number of different things you could do. A guy I've listened to in the past, and it's been years since I've listened to any of his stuff, is, what is it called? The Nomad, Tax Nomad. It's escaping me. I don't know why this is escaping me right now. But basically it's a guy who just talks about the different ways people can engineer their lifestyle to be profitable, right? So relocate out of high tax environments like Canada and go elsewhere. Of course, there are the others, like I said, always, that are just going to figure out the way to most efficiently structure in Canada and make it work. For instance, I think it's fantastic, like comparatively, probably compared to a lot of other jurisdictions, to get a 12.5% income tax rate in corporations for the first $500,000. That's really advantageous. So a lot of people might look at that and say, I can really crush in Canada by taking advantage of that. And of course, I absolutely think it's possible too. And that's why I'm one of the balanced ones. I have people like reach out to me and they're like, Canada's done. I'm like, you know what? I'm not going to say that. Like, it's not really somewhere I want to grow right now, but I still think you can crush here. So, I've had people get mad at me for posting pro-US stuff and say, hey, let's not be all one-sided. And I come back with I'm extremely balanced on this. Like, I think both can work. You have to pick what it is that you want long-term and decide if you like the direction Canada's going in. You could see, raising multiple, children here, if that's your scenario or what have you. And if that's something you want to do. I was just talking to a friend of mine this morning and he's like, yeah, we'll be in the US by March. So that's definitely happening to a degree. I just wanted to share, sort of the idea of the visa and why people are doing it, some things to consider. If you just want to invest in the US, like you want that hedge, which is pretty much how I've started, you don't need any of that. Like you can just basically form an entity that can be done on Sunbiz. If you're in Florida, you can do it with Northwest Registered Agent. If you're looking at other states, there are many things involved, and you should definitely consult an international attorney or a U.S. Real estate attorney, but you'll also want Canadian tax advice. There are firms that specialize in cross-border. I would strongly suggest that you find some that do that and work with them, because there's a lot of moving parts. But at a high level, what I see people doing is forming their entities, getting an operating agreement, buying some properties. You get an EIN from the IRS, which allows you to pay tax in your entity. And then you ultimately get a personal identifier tax number for your own filings. The thing is, like, you gotta be ready for that if you're going to do it, because it's expensive to have the entity structure and to file internationally every single year. So it needs to be part of your strategy. You need to have that. You need to be convicted in that you're doing that. And it's not just a whim. And you're not going to do it for one or two properties. You're going to do it as a investment strategy. So maybe you have 50% on both sides of the border. You grow in both jurisdictions, or maybe you've decided that your Canadian portfolio is good and now you're going to build in the US, or you're still going to grow more in Canada, but you also want to grow this thing in the US. Any of those scenarios in my head make sense, but not the one-off. The one-off, I would not do that. It's just going to end up costing you money in the filings and such. So Just my 2 cents on that stuff. So if you were going to go ahead and do that, once you get your entities, you can just start buying properties. In Florida, a title company can close it, so you're not even dealing with a lawyer. You can work with a realtor. They'll sign all the contracts for you. It goes to the title company, and as long as you're title insuring, you can close it with a title company. Good to have an attorney down there too for the complicated stuff, but for basic transactions, you can do that. Florida would not be my first recommendation for cash flowing properties, just being that it's just a higher property price point on average in the state. You can pick other states like Ohio, where the average house price is just way less, and you're going to find a better chance of cash flow in markets like that. But yeah, if you are interested in investing in the U.S., if you do have any quick one-off questions for me, you want to hit me up with, feel free. Instagram at the Andrew Hines, and Andrew at andrew-hines.com if you prefer email. And thanks for tuning in this week. I hope you found this valuable. Just wanted to share some insights, some thoughts on where things are headed and how you can potentially look at expanding your investing into the U.S. or internationally. Let me know in the comments if this was of value to you, and I will see you again on our weekend episode.